What's cracking, everybody? It's Michael Martin. Thanks for being here. Baseball season started. Yanks had a big day Saturday. Also watching the Mets, the Cubs, the Dodgers. I just love baseball, so I'm a happy guy. It's like Christmas for me. Today, I want to give a shout out to a relatively new subscriber, Geraldine Rose. Thanks for being here. I feel your pain. I've been bringing your content to really grasp the wisdom and knowledge. I've been at the game for 3 and 4 years. So she left a really great comment, and today I want to revisit something that kind of summarizes a lot of the videos I've done recently, and put this thing into perspective for all of you. If there's one reason why I ultimately win at the things that I do, it's my level of preparedness. So I want to harp on that today, because I think from the comments that I get, I can kind of infer what you're getting at. That a lot of you approach the trading day as like, what do they say? It's a white canvas, man. You get to paint it the way you want to. And that's bullshit. It's not a white canvas. If you talk to anybody who's a pro athlete, they tend to play one position. Now, there's a few people who can do a few different things, right? But for the most part, a guy who's going to catch is going to catch. They're not going to make a good center fielder, right? So there has to be kind of compatibility between who you are as a person and what it is that you want to do in the market. And that means, how do you want to spend your day? Also, what kind of money you want to make? Because there are things that might align with you that feel good to execute, but there's not a lot of money in it, right? And it forces you to be at your screen all day. Now, I know friends of mine run prop trading firms. I know mostly everybody. And, that's a different environment. That's their job, to sit in front of the screen all day. Me, myself, for where I am in my life, I want to be a business owner, not a business manager. And so my whole orientation to trading is XYZ, to use the leverage of time and money in my favor. And they say, oh, well, Mike, they're minting all these millionaire traders. And I'm like, well, that's an unfair question, because the millionaire traders come to me for advice. So I can't say that I've minted them. They're already millionaires by the time they get to me. So I guess you win. But going back to me, my favorite subject, the level of preparedness is an ongoing battle. It's an economic battle, not just about money, but about time and effort, right? In jiu-jitsu, we learn about using leverage, how to use your weight. It's me and the mat against my opponent. It's not about big muscles. In fact, when guys who are bulky, weightlifter types come in to train jiu-jitsu, they don't stick around too long. Why? They have too much muscle that has to be, fulfilled with oxygen, and they don't have the gas. They can get it, but they're oftentimes very frustrated because all their strength, which is, impressive, it doesn't really translate well to the mats. So I always try to over prepare for things, because first of all, things very rarely go the way you expect. If they do, amazing. Thank you, God. I'm on my knees. But oftentimes they don't. So you have to have contingency plans, right? Now, if you're showing up every day in the marketplace trying to figure out what's going to happen that particular day, I would say don't trade, because to me, you don't know what you're doing. And I'm not trying to sound like this overbearing dad who's like, from what was the great movie with all the young stars, kind of it's called Dead Poets Society. Forget all this acting stuff. You're going to go to Harvard and you're going to be a doctor, right? So that doesn't play all that well. You have to let people do what they want to do. So my goal in the coaching, if you want to learn about the coaching, I'll drop a link in the description. It's looking like we'll put together a mastermind within the next week or so, because I'm getting bombed with emails asking me if the thing is open. There is no online store. I don't believe in that. It's not retail. And everything is customized. So a couple of things. I have a notebook full of notes here, so I might look down to it once in a while. What is the market tone for the instrument that you trade, right? So for smaller folks, if you're just trading stock indices, the market tone is down. So that means you need to know and understand that, right? Who's in control of the market? Right now, it's the sellers. Despite whatever optimism you might feel, oh, it can't go down anymore. Sure, look at Nvidia. It's down 35%, 40%, just eyeballing it from where it is. How much can it go down from here? 100%. It can go down 100% from where it is. So there is no, unless you're looking at the data, which I think most of you are looking at charts, there is no, um, there is no foreshadowing, so to speak, on how bad it can get. Right now, the market is in, bearish mode. And so you need to have bearish strategies. Now, if you're trading individual stocks, then you can start to think relative strength, right? So where's the relative strength of the instrument that you want to trade with respect to, say, the S&P? The market tone is down. If you're looking for high RSI stocks, you can find that publicly. That might be helpful, but keep in mind that the general tone for investors right now is fear-based. And when fear hits the tape, and it hasn't really hit and capitulated yet, even Friday, there was a big off day. So you have like, boom, you're going to try to buy stuff in a down market. Those moves might be protracted on the upside. So you could be finding yourself into, frustration, right? Because you're kind of going against the grain. Now, so then you have to have strategies for each, right? So if the market's tone is bearish, what are bearish trades that you can put on that are, conducive for you to put on, that gel with your temperament and your personality? If you don't like playing the bear side or being a short seller, you might have to sit out, or you might have to do a lot of extra work to find the bullish names that are going to work out. And that's a tall order in a down market. So you can sell the market short, you can sell stocks short, you can buy puts, right? You can sell calls, you can do bear net credit, bear call spreads, net debit, bear put spreads, right? And so if that's the deal, in futures you can do mostly calendar spreads, because there are no strike prices with futures contracts. There are obviously with options, but you can see, like, is one contract gaining on another one? Is it seasonality, right? So there's many futures spreads that are very actively traded, depending on the commodity, right? There's old crop, new crop. Then there's, change in seasonality and weather, like in some of the energies, especially natural gas. So when you start to think like, okay, I'm going to come into today's trading day, I need to have a game plan. Okay, first and foremostly, what's the topography of what I'm looking at? Bearish sentiment. Market, the overall power is going down. Doesn't mean you have to like it, but it is what it is. A is A, right? So then you're going to have to say, like, okay, well, I like to trade the opening ranges. Perfect. So now you know that you have to be trading a bear trade, something that's bearish, in line with the overall market tone. And so this way you start to think like Friday, Saturday, Sunday, a couple of days ago. That's what you're looking for. Now, it is possible that the market have this big puke out and it could rebound, but the overall trend hasn't changed yet, right? Now, it can make a V bottom. There's ways to trade that. But what I would do is, once you have this plan and you have all your preparedness set up, don't waver from that. If you want to trade, again, one of the oldest trades in the book, look at the first 5 or 10 minutes, establish the range, look for a breakout above or beyond that, then the retracement, and then as soon as it starts to take off in the direction of that breakout, you go either long or you go short, depending on it, right? It's been around forever. But if that doesn't show up for you and you're in the first 30 minutes of trading, don't start making shit up on the fly. This is what gets you killed. You're just winging it at that point. So you have no preparation put in. You have no paper trading done there. You're just looking at the social media, looking at the leaderboards, trying to pick shit out of a hat, going, all right, might as well try it. Looks good. And you have to remember volatility and or really, really big moves doesn't mean that it's opportunity for you if you don't have a plan, if you don't know what you're doing. So figuring it out on the fly, okay, good. I'll give you credit for using real money and taking a shot. As long as you're risking, say, like 1/10 of 1%, there's probably some long term educational wisdom in that, but you're going to have to do it like I did and take 4.5 years. I'll just, for those of you who are new, first of all, thank you for being here. When I grew up, it was post the 87 crash. And so people were still kind of skittish. Stocks traded in eighths. There was no wireless technology and there was no internet. So anything that you're doing through, your computer or your phone didn't exist then. So the only thing I could do really was trial and error. You could paper trade, but it wasn't anything that anyone really talked about, right? Looking back, paper trading really became something to talk about, I'll say maybe mid 90s, perhaps. So, having said that, this is also another reason why people go on tilt. They show up, they don't have a plan, they figure out, like, well, I'm just going to figure it out the day of, right? A lot of day traders do that. And that works if they have 5 or 6 different ways to trade. But if you don't have one or two methodologies that you can trade the open or the close, and that's what you do. And then the rest of the time you're either painting, you're going on hikes, walk around the reservoir in Central Park, ride your bike around the loop, go meet friends for lunch and come back for the closing hour. That's legit because at least you know who you are as a trader, right? Sitting there and trying to observe stuff intraday to like, hey, I got to find, anyone have a clue? Like bumming a cigarette. You're killing time. It doesn't help you. The screen time is wasteful. It's not good for your eyes. You become very myopic. And by not having a plan, you make yourself let me say this in English. You make yourself susceptible to going on tilt. Why? Well, because you feel, right? This is how craziness happens. Michael, I've been sitting in front of the screens for days, weeks, months, enter the time period here, and I just can't figure it out. And I just got so aggravated because I'm not seeing the results. I went on tilt, and I knew I was on tilt, and I kept doing it anyway. And this is what I was talking about the past 2 weeks, is you need to envision yourself winning with a winning technique long before you even perhaps fund a margin account or whatever to trade. And I feel like the market, the marketers, the environment that as a student that you might be in does a disservice to you because they make it sound like it's so damn easy. And the truth is, it's just not. There's nothing about trading that's easy. It goes against everything where you're a million years of evolution in your body, and trading asks you to do something different. Go to the risk. Well, we don't have that in our store. Why? Well, for a million years, it was fight or flight. We'll fight back if we're cornered, right? So now you're deliberately going into risk. You're adding risk, right? Educationally, since kindergarten, right, you were given gold stars and little smiley faces with the things on the thing with the red marker that you put on the refrigerator door, and you were rewarded by people who mattered to you, like your parents, like your teachers. It built your self-esteem. I know that. I went to an Ivy League school. I was all about that. But you only have to be relatively intelligent, right? So you have to unwind the need for accuracy for the most part and understand expected values. Learning what are the things, the data parts of a trade that you're looking at that you can use to help you understand your trading methodology so that you could eventually calculate your expected value, but then have the patience, right, to sit and wait for the optimum setup. Remember, I talked about like, hey, remember, I need these 5 things to line up, Mike, but if I only have 2 or 3, is it okay to put on a trade? And my answer, to be a puritanical person about it, is no. Because it's like I said, if you want to go away on a long weekend with your honey or your beau, your bae, man, people just have the stupidest words for stuff, right? you don't start and pack and get everything organized and then confirm the confirmation of your trip, and you've got your dinner reservations all, and you go out in the car and you're like, we only got a quarter tank of gas. So you set yourself up for failure by not being prepared. And part of that preparedness is not just having an idea, obviously, of what's the direction of the market, what's the current chart pattern, what are the overall levels for the instrument that I'm looking at, like what was yesterday's levels, what were yesterday's levels, and then going back even further in time to make sure that you're focusing on trading in the direction of the overall market feel, right? Knowing where those more material levels are, which means you need to do an enormous amount of investigation. And I think what happens is, I think there's a group of people who are like trying to day trade the MNQs and the E-minis and this and that. And I get it. You've got limited capital, but you end up forcing trades when there are none there, right? Is I could look at those two markets and tell you two or three setups that might work on the downside. And if you don't have those shots in the bag, as we used to say on the golf course, then there's no trade. And if you wanted to fix it, you kind of have to go back to the drawing board, get off the screen, and see what that would have looked like over thousands of instances from a back testing standpoint, right? Because I can run back the tape and all this and that, but that to me is still cherry picking stuff. Yeah, I would have bought it right here. Yeah, your sister's ass. So then there's like, okay, well, I want to graduate from there, and I just want to trade continuation patterns. Perfect. But study them, know what the expected value is before you actually come into the marketplace and you want to commit real capital, right? So this isn't new, right? I've talked about this for a while, about different levels of preparedness. You can look it up. It seems it's timely now. Why? Because the tenor of the market has shifted, right? There used to be the seven horsemen, and there's always memeified names, right, that attract. Then you had the GameStops and all this other AMC and all the Reddit crowd. More power to them. But as you find out that trading, you can find yourself being not you, but you realize that a lot of these people are just complete idiots that found themselves in the right place in the right time. On Wall Street, we were like the rich kids thinking that they're making money, like they're born on third base thinking they hit a triple. You know what I'm saying? So well, I guess what I'm getting at is preparedness can cure a whole bunch of your ills, right? Because if you don't have it organized, in writing, which I love, I've got pens all over the place. I've got 1, 2, 3 notebooks right within arm's reach. When you write it down, you make it a contract. You make a commitment to yourself, right? And again, I'm not putting a stick in anyone's eye, but it's like, if you can't put it in writing and make a commitment to yourself, why would anyone else do that? You know what I'm saying? So, think about, I have to act like a professional because my activity makes money and I have other people who want to give me money. I would try to psych myself up using that language. In fact, I did. I still to this day use those types of, they're not really mantras, but I speak to myself as if I'm in possession of all the goals that I want to achieve. And I say it in the present tense because then it fills my body with all that energy of actually having achieved it. Because the brain can't tell what the hell the past, present, or future is. Then that fills my body with that energy that allows me or helps me. It gives me a little bit of a human growth hormone, HGH, to go out and execute, right? Because it's the execution, the behavioral part that gets you where you want to be. You're not going to ideate your way into $1 million. It doesn't work that way. You have to do the damn work. So, and this goes back to the art of war, right? I say all wars are won before the battles are fought, but they never really explained why, right? So people are kind of spouting out at the mouth as if they invented it. And the reason is, if you read the chapter on preparedness, it's because victorious warriors first win, then they seek battle. So, Geraldine, everyone else who's watching, a good thing to do might be to put a bit of a governor and say, I'm just going to trade this setup this week, and that's that. And if it doesn't show up, that's not my fault. That's the damn market environment. But what I'm not going to do is like go out. It's like going out for drinks and saying, I'm just going to have two. And then after your fourth or fifth drink, you're like, what happened to my discipline? It went out the window. And the preparedness really cures all, not all, but a good chunk of what beginning traders and traders like yourselves who are really trying to figure it out and get the consistency down, right? The preparedness kind of says, okay, here's my menu. Yeah, but I want to have chicken catch tonight. I'm sorry, well, chicken catch isn't on the menu tonight. We sometimes have it, but we don't have it tonight. We don't have the ingredients. So I'm sorry, and I can't make you a version of it because it's going to come out poor. So this is why I say spend time away from the screen so you can think. When I was talking with Jason Shapiro, I was like, I haven't traded in 2 weeks. And there's, some people wrote and said, Mike, I don't understand. Like, you have all the money in the world. You trade anything you want. How you, there's no trades. It's because I look for specific stuff. And if it's not there, there's no trade. What the hell's the point in doing that? Furthermore, I do give a lot of money away. That's where I exercise my philanthropic, as eleemosynary kind of stuff. I don't want to do that in the marketplace. So, what's the point? Why give money away? Trading is hard enough. It's hard enough anyway. But here's the benefit of saying, like, you want to trade the open and the close. For example, you free up a lot of time. What you don't or might not remember or even think is just how valuable it is to sit still, not have to do anything, and just have the ability to think. I mean, that for me as I'm sitting here looking you in the eye, that is invaluable for me right now, is to be able to collect my thoughts, think. I don't really journal as the way you would think it, but I do write ideas out and try to develop them as like ideas, show ideas, this and that. What am I going to include, in the mastermind, given that it's all customized and we're kind of in market environment we're in. Chats I have with Victor or other very well-known traders about history of the markets, right? So, and then how does any of that apply today? So when you get to really think, that's when you can come up with some really good ideas. So I think, I've always said, what the inner voice of trading is like, you need to figure it out first, then the execution part's easy. So think about it for a minute. Again, with preparedness as the thesis or the tenet of today's conversation, if you say, well, Michael, I do want to trade the market short. I don't want to take a lot of risk. And I'd love to be able to define my gains or losses. So right now I'm thinking you're going to buy bear put spreads, right? Maybe you can do definitely net credit bear call spreads, because you can define what your max loss is. Anytime you do spreads and you have two strike prices, floors and ceilings, right? The most you can make or lose, or the sum total of the max gain and the max loss, has to equal the distance between the two strike prices, right? So if you have, a $10 vertical spread and your max gain is 4, your max loss is 6, right? So there's these types of things. Now you could say, well, why would I do a trade if I could only make 4 and lose 6? Well, then expected value becomes, an integral part of that. So, I don't want to lose a lot of money, trading the market short, and I don't like options. I'm like, okay, so look at the minis or the micros, right? And only trade around key levels, not intraday levels or where they support in the market during lunch hour. Like, that's not material. It's not statistically material is the point I'm getting at. So in a long-winded way, when you're trying to figure out what's the best way to trade, knowing who you are first eliminates a lot of the noise and the nonsense that might not make sense for you based on how you're currently built. It doesn't mean you can't change. I've seen people do amazing things, but you really have to think like, this is the way I'm built right now, and there are my goals for trading. And so how do I bridge A and B, right? That's the whole thrust of the training. For some of you, you can figure it out on your own, like I did. It just took me a damn long time. It was like 4.5 years before I kind of knew that I was onto something, and then I needed at least 6 months to kind of figure out that I was, in fact, because I had the data, right? So you have the data through the back testing, the data on the charting and on the spread Lotus 123 spreadsheets at the time, and then you kind of go from there. So spending time away from the screen is a very healthy thing because it gives you time to think about who you are and what you want out of your trading. How do you want trading to serve you? Because you're in control. You don't think you are, but you absolutely are in control. You get to determine what instrument you want to trade, what direction you want to trade, what kind of money you want to make. Are you going to add to your winners or not, even if it's just intraday, right? Via a continuation pattern. Or are you just going to be a scalper and look and eventually develop, like an opening range, trade within the first 15, 30 minutes, then see if there's a continuation or not. You offset the trade, and then you look and see, okay, well, maybe if there was a big sell off, there's a way to trade the bounce. Like all those trades, they all have a different response financially and emotionally, and that might not gel with who you are as a person, right? Remember how I say there's always this two payoffs to every trade. There's the financial part, there is the emotional and psychological, which they all kind of go together there. And so every type of a trade is like a new person that you're going to meet. They all kind of have different financial payoffs, but they also have a different emotional triggers, I would say, that are going to push your button. So you have to be able to live with that and make friends with it. Because you might be like, man, everyone's talking about how I can make 100,000 a month scalping the opening ranges, but I just can't seem to get it together. Well, it just might not be compatible with who you are as a person. And that means you either have to find another strategy or you have to change your emotional makeup, which is doable, but it does take time because we're built the way we're built, right? We're all products of our environment. Our parents had a big impact on us and how we evolved. And so, it's all doable. You can absolutely do it if you put your mind to it and you manifest it. But I can't tell you how important, like the single most important thing that I do over the weekend, even during the day, is I think away from the screen. I put my time in and I ideate about what I want, then I go look for supporting data, and then you can start to execute into the market. It's very difficult to figure it out on the fly. And it's true in life, so it's not just true in trading, but preparedness is really what leads you to the success. It's not the magic chart pattern. It's the level of preparedness and think about it. We talked about Kobe Bryant, and he'd put in, he had three or four times as much practice as his own teammates, and these were on championship teams, right? So, Wayne Gretzky used to put up, parchment tracing paper on the TV, and with a pencil, he would follow the puck around and draw it out on the paper so that after that period of hockey play was over, he could look and see, okay, well, where did the puck spend a lot of time on the ice? And that helped him, right, do what his late father Walter said, which is don't go where the puck is, go where the puck is going. So he had all this reconnaissance. So the same thing, we talk about preparation here, and even with the $1 million traders that I get to deal with, a lot of when they run into trouble, it's because their preparation kind of got lax. And it happens to everybody. My first semester when I got into school wasn't a great one. I know I could have done better. Why? Well, because getting into the school was the goal. I didn't have a plan on what I was going to do once I got there. So my GPA took a little bit of hit. I'm not, it wasn't going to put me out of business, but instead of getting A's, I was getting B's. And I was like, you know what? I just wasn't applying myself. I didn't have a plan for success. And the same thing can happen with really, really great traders who are on desks and making 7 or 8 figures. Is when you have some success, you could be like, yeah, man, I really got this game down. And, you start having mimosas for breakfast and, and what happens? Performance starts to lag because you don't take it as seriously. So a lot of the work is about the mental preparation and the marathon part of it so that you can always keep pace with the storm, stay ahead of things, and then have the emotional maturity to say, you know what, this isn't my market environment. The trade setups just aren't there. Tomorrow's another day. If I want to give away money, I can go do that on my own. I don't have to give it away here and be a bonehead, which anyone can do. And, it's that easy. So if you want to learn a little bit more about the coaching, there's a link below on a contact. You can reach out. Otherwise, I hope you have a great week, and I'll see you next week.